Hey everyone, welcome back to Santi. Today we are going to speak about Bitcoin's worst case scenario given that a recession doesn't materialize. If you follow the news, you will know that recently we had many bearish catalysts. However, most of those are already behind us. And that's the reason that we had a massive rally in Bitcoin's price. Here we had close to 24% increase, 23% increase in Bitcoin's price in less than 2 weeks. This was a massive recovery rally. And the most important thing is that Bitcoin is now back above 61K. And you will know that 61K acted as support multiple times throughout 2024. That's why Bitcoin's recovery rally that we saw in the last few days is very significant because it brought Bitcoin's price back above its 61K support zone. And also, it brought Bitcoin's price back to its bull market support band because during this dip, when Bitcoin went down close to 53K, this was when German government was selling Bitcoin in the open market. Bitcoin's price plummeted and it went below its bull market support band. But currently it sits close to the 20-week SMA and it's above its 21-week EMA, exponential moving average. Now we need to wait to see whether this zone acts as a resistance because currently you can see that Bitcoin couldn't pass this zone and we already had 2 days of red candles. So we need to wait and see whether this zone acts as resistance or not. If this zone is not a resistance for Bitcoin's price, then the short-term bias can be that Bitcoin is headed to 71K. That's simply because Bitcoin's price bounced between this range for many months. 61K was the support zone and 71K was the resistance zone. And as you can see, it happened multiple times in the recent months. And if this zone of 64K is not a resistance because of the bull market support band, and if Bitcoin can overcome that resistance zone, then the short-term bias is that Bitcoin is headed for another rally, which will take it to 71K. And if you follow the news, you'll know that recently, in the last few days, we had a lot of bullish catalysts emerging from nowhere. Because a couple of weeks ago, we had only negative catalysts. However, a few days ago, a few new catalysts that are positive emerged. First of all, the SEC dropped its lawsuit against BUSD. And this is very significant because it seemingly means that all stablecoins are not securities. This is just massive for stablecoin regulation. Then we had Trump saying that he will attend and participate in the Bitcoin conference later this month in Nashville. That's another bullish catalyst because we know that it might bring some new retail investors into the crypto market. Another bullish news is that the German government sold close to 50K Bitcoin in the open market in less than 3 weeks. And a lot of people, including me, anticipated that the sell pressure will take Bitcoin's price much lower than it actually did. So now the German government has 0 Bitcoin, and that's another hindrance that's out of our ways. Now the only remaining bearish catalyst is the sell pressure of Mt. Gox creditors. So it seems that bullish catalysts outnumber the bearish ones as of now. However, you will know that in crypto, catalysts, either positive or negative, can emerge from nowhere in no time. That's why in this video we are not going to concentrate on the fact that in the short term we might have more bullish catalysts than bearish. And we will consider the worst case scenario for Bitcoin if there is no recession. And for that we are going to heavily rely on TA, technical analysis, because we can find the psychological levels where Bitcoin can find its support if things go south. Let's erase the drawings and let's look at the technical analysis of Bitcoin. Let's move to weekly chart. By looking at the weekly chart, we will see that if Bitcoin goes down and if Bitcoin goes as low as it did a few weeks ago, which was close to 53K, under that price, we will see that Bitcoin had a support zone which is close to 44 to 48K. So this is a zone of support, not just a line. Or instead, we can just draw a rectangle. Let's just get rid of this. So we can see that in this cycle and in the previous cycle, Bitcoin's price found multiple support and resistance zones in this range from 44 to 48K. And if Bitcoin's price goes down again because of some bearish catalysts or because of the sell pressure of the Mt. Gox creditors, and if Bitcoin price goes as low as it did a few weeks ago, which is 53K, under that price point, we see that the next support zone is close to 48K. And this is actually a range of support. It's not a line. So that's why we will call it support range from 44 to 48K. And if we measure drawdown level from the current price, we will see that if Bitcoin goes down to 48K, it will result in another 24% drawdown from the current level. However, if it goes down to 44K, it will be close to 30 or 31%. It's a massive correction, I know, and it doesn't necessarily mean that this scenario should play out. We just discussed the worst case scenario for the short term if there is no recession. So it doesn't mean that this should happen. This is just the worst case scenario. We just need to look at the data and we should identify the key psychological levels of this and previous cycle where Bitcoin found support. Because when Bitcoin goes down in price, and if we have a drawdown of, let's say, 20 or 30%, a lot of people will buy the dip, as they did when the German government sold its Bitcoin, and we had a recovery rally here. So by buying the dip, the supply side gets exhausted and the demand side gets extensively stronger, meaning that we have higher demand than supply. And that's why the recovery rally starts from that point. And you will know that usually prices find support when they go down at psychological levels, because when they reach to, let's say, 48K, a lot of people will just buy and sellers will get exhausted. And because we have more buyers than sellers, we will start to see a recovery rally. It doesn't mean that it will find the perfect support at this range. However, the chances are high that it will. And another supporting argument for this range could be the 100-week SMA, simple moving average. As you can see, currently it sits close to 36K. However, this is a rising function, meaning that in the upcoming weeks or months, it's going to find its way close to this range, 44 to 48K. Even if we have a drawdown of, let's say, 30% in the short term, this function is still going to rise because it's the average of the last 100 weekly closes, and it gives equal weights to all 100 weeks. And because we had a massive rally, we are going to see this function rising in the upcoming weeks, even if we have a correction in Bitcoin. That's why in the upcoming weeks or maybe months, this function will rise and it will find itself close to this range, 44 to 48K. And why is this important? Because if we go back to the last cycle, you will see that here, Bitcoin had a rally and it was more than 300%. This is 2019 bear market rally. And after the rally ended, we had a cool-off period for a couple of months just before the COVID recession. And during this cool-off period, which lasted for 6 months, Bitcoin's price went down and found support at 100-week SMA. Then it bounced off the 100-week SMA, and then we had the second connection. However, this one was not as perfect as the first one because Bitcoin went down a little bit and it went below the 100-week SMA. But we can see that 100-week SMA was a support zone for Bitcoin. And in case we have some bearish catalyst in the short term, Bitcoin can still go down and find itself close to the 100-week SMA. So it can find a support zone close to this 100-week SMA, which is a rising function. And in the upcoming weeks, it will be close to this range. It will find its way in this range. In sum then, if Bitcoin starts to tumble and go down in price, the first level that we should look is the 61K support zone, of course, because currently Bitcoin's price is above that critical zone. Then the next zone could logically be the 53K, because a few weeks ago Bitcoin went as low as 53K. However, this is not going to be a strong support zone. And the next support zone could be the range of 44 to 48K. This is because of the price action of this and previous cycles. So that could be the psychological level that deep buyers will outnumber the sellers. And because of higher demand, a new recovery rally might start from this key zone. So please keep your eyes on this if Bitcoin goes down in price. And this doesn't mean that this scenario should play. No, this is just the worst case in the short term that can happen to Bitcoin's price. This is the worst case scenario, and there is no guarantee that it will play, and it's not even my base case scenario for now. If there is no recession, it's hard to believe that Bitcoin will go down to 44 to 48K in the short term. Or we should have a massive bearish catalyst for that. So that was it for today. Thank you for tuning in. And please like and subscribe this video, and I'll see you next time.